Fibonacci retracement and extension convergences. Once again, looking at retracements, price retraces, and then it moves past the previous high to an extension, 127%, 162%. What this is going to look like, or what we're looking for now with the retracement extension convergences, is this. Price makes a low, and we have a rally on the price swing. Price retraces to 38%. And then what it does at 38% is it actually forms a very distinct low point here. Then it bounces or goes into a consolidation. So we may see a slight bounce or a distinct bounce. Then price forms a high and may start to continue downwards. Once this low is formed, then we pull our Fibonacci from this high to the most recent swing low, and our retracement levels will appear in the software: 38, 50, 62, 79, 100. And what we have is we now have a downswing potentially in an overall upswing. So in the upswing, our retracement values are 38, 50, 62, 79, 100. And price is now forming a downswing. Downswing low, retracement to 62%, and then extension to 162%. When we line up the Fibonacci's on the original swing and the extension levels on the interim downswing, we have an alignment of the 79% retracement level and the 162% extension level. This formation is also called a Gartley, but we're calling it a Fibonacci retracement and extension convergence. So we have the two levels converging at one point, and this again provides a nice strong base of support where price is exhausted on the downswing and has reached a distinct retracement level as well as they converge at the same point. Then we start to see price move in its original uptrend direction. Now remember how I showed you that how price has swings inside of swings. So we have an overall uptrend, but we have downswings in an uptrend, contributing to the base of a retracement in the continuation of an uptrend. Let's have a look at a couple of examples now. Here we have a big swing and a retracement down to 62%. First price stalls at 50%. It actually bounces at 38%, then stalls at 50%, then moves and touches base at 62%. In the meantime, we see this downswing, retrace 62%, and then extend 127%. And we have a 62% retracement, 127% extension, and then price touches it and rallies, looking to make new highs. Looking at an Australian dollar 2-hour chart now, we obviously have multiple swings here. And what's important for you to do is you're going to have to go into your software and just work with the Fibonacci tool and interact with it and play with it in a whole on all kinds of swings and all time frames on your chart, and you'll start to get the feel for its use. Now, I've chosen this low of support as we see a real nice rally from this distinct low. Price retraces all the way to 79%. But in the meantime, you remember how we have price swings in an uptrend, price swings in a downtrend, in an overall uptrend price swing. Now, let's look at the price swings in the downtrend. From a high to a low, retracement, extension 162, and then this is the 262% extension of the original downswing. Now on the next downswing, we have price swings down, retraces, and then extends down 162% of that downswing. So what we're looking at here is with the 262% of the first downswing, 162% of the second downswing, we're looking at price exhaustion at around this point. And we have a price exhaustion at the 79% retracement level. This is an interesting slide. We have one big price swing and price retraces to 62%. And the reason why I froze it in time here is because I traded this bounce. And we don't see much of a bounce here, but it was very tradable because this 62% retracement level was very distinct. And we had moved generously during that session on this. You see this 4-hour chart? We had a real nice down move into the 62% retracement, but it's also a 262% extension of the breakout downswing, right? Now, we also had up here, we had a 38% and 162% convergence, and price bounced here, but only modestly. And if you traded this long, which was a logical trade because we were at a base of support here, it was a logical trade, but the trade didn't really bounce much. It just came back up to previous resistance. So previous support was resistance, and then it continued its fall. But I just traded this bounce, that was all, and I got some pips out of this bounce. Price eventually moved up a little bit, but then continued down and bounced at the 79%. Here's a British pound 4-hour retracement and extension convergence. This was happening at the same time as the previous slide, and we see this big up price swing and a large retracement and a bounce. First of all, price reached a high here and bounced at 38%, had a considerable bounce of a little over 200 pips. It rallied up to the 79% retracement. It fell, and here an economic report put it below the lows, and it consolidated below the lows. Then it targeted the next lows and went to 162% extension on the downswing, 62% retracement level on the big upswing, and we had a real nice bounce here as well. You can see it's over 100 pip bounce, what we can see here, but it actually, again, it bounced a little bit deeper, and then it continued its downswing. Here's a little closer look, and we have price rallies, and then we see this small downswing. And the reason I took a snapshot of this one was also because I had traded it. We see this small downswing, miniature head and shoulders here, retracement to the just above the 62. Price continues to fall And as London, what happened is this candlestick was the open of London, and we spiked down, or early London, spiked down to 162% and the 62%, then made a go at the highs. But look at the distance between the two. The other important point about this 62% and 162% retracement is it's the figure. It's also 1,700, the figure. We had a nice bounce up to almost 7,900, and what happened here was price fell, then ended up coming right up to 7,900 and then falling generously from 7,900 on this trade. There was a real nice trade to be had here on the Sunday night trading, Asian trading Sunday night. In any event, this is a Fibonacci extension, retracement convergence on an intraday basis, and we see a real nice bounce there. A British pound 1 hour chart in a downtrend. We see price falls down. Okay, get your eyes fixed on this downtrend now. Price falls down. We have a downswing, the retracement of a downswing. Bounces at 38%, bounces at 62%, and then comes all the way up to 79%. We also have an upswing. Price rallies, retraces to 50%. The British pound loves the 50% retracement. It extends to just below 127% extension. But look at the weakness in the candlesticks. You see these candlesticks here showing weakness, and we see prices making lower highs and lower lows here as price continues to struggle to move up. Looking back in time, if we look at the bodies of these candles remaining below this level of support, which is now offering resistance into the market. Now let's look at an advanced fib sequence. Okay, we have this big downswing and then the retracement up to 79%, but we see one swing, rallies, retraces to 50%, then extends to 127%. Then from this low right here, price rallies, retraces 62%, and rallies to 127%. So we've got a double 127 and a 79% extension, and then the exhaustion. And then price falls here, retraces, and then it goes between the 62 and the 79%, but then extends down to the 162% extension of this full downswing before it gets exhausted and begins to retrace. Trading Fibonacci retracement convergences, a couple of points to note. You will pull your Fibonacci tool, connecting the low and the high of the most recent price swing to get a view of the key Fibonacci levels. With a new Fibonacci tool, using the same recent high in an uptrend, pull your fibs connecting the lows and the recent high of the previous larger swings to see if any of the key Fibonacci's will converge or align with one another. For example, the 62% of the recent small swing and the 38% of the larger swing. Look to see if the Fibonacci convergence also aligns with other key levels like support and resistance, pivot levels, trend lines, indicators, and other tools that you like to use. Consider all other trading factors. Look for the possibility of a trade, When you see significant convergence, the more factors that are in alignment, the higher the probability that will be associated with that trade, and the market will bounce at the identified price and offer some pips. But again, you must consider the entire foreign exchange environment at the time. And continue to merge your MACD and pivot levels trend lines with the market movements to really establish an optimal entry into the market.